What's going on, guys? This is Aaron from Departures Capital. We're here with Marc, President and Director of Eat Well Investment Group. How are you doing today, Marc?
Oh, doing great, Aaron. So delighted to be with you and your audience.
Yeah, definitely. So Eat Well Investment Group is a vertically integrated seed-to-market agribusiness and food tech company focused on plant-based food. Can you tell us a bit more about the company?
Yeah, absolutely. We're really new. We just executed our name change just a few weeks ago on the CSE. Our company is new, but our team and our businesses are with decades of experience, really, and we'll talk about those just in short form. But what we have done is created what is one of the few vertically integrated plant-based foods platforms by design from the beginning. So our team are veterans in consumer products, agribusiness, food tech, commercial development, literally building buildings to make plant-based foods. And we've been in the market for over a decade with early investments in some of the name brand companies everybody knows today, when people were balking at a $200 million valuation for Beyond. So we saw years ago there was a gap in the market, because today, and you can see this anywhere you look, most of the plant-based foods companies are either upstream, midstream, or downstream, right? They're either a brand with a great commercial engine, they might be food tech and R&D, but that's going to take years to monetize, or they're upstream close to the farm. What we've done at Eat Well is designed a vertically integrated platform from the beginning. And so our initial two investments already cover the upstream close to the farm, and food tech with some practical consumer products coming out later this year.
Awesome. So there has been a huge push towards plant-based eating in the last few years, as you know. Can you talk about the growing need for plant-based alternatives and how Eat Well is contributing to the solution?
Yeah, it's in some ways you have to smile. I joke that I started my career at the original plant-based foods business. It's called the Quaker Oats Company. It was well before anybody was using terms like plant-based foods or flexitarians. And I'm a consumer products veteran. I've been doing it for over 20 years. I've worked at big brands like Gatorade. I've worked in the nutrition space, sports nutrition, plant-based nutrition. What we do have is a remarkable, once in a lifetime, maybe once in a career, just a constellation of multiple things happening at once with plant-based foods. Some folks, Aaron, would have come into the space because they're save the planet environmentalists. Well, we believe in environmental stewardship, and plant-based foods matters because it helps balance nitrogen and carbon in the air and mineralize the ground. And it really balances all the effort that's put into traditional meat production. Others come into it for health and wellness. We've learned so much about gut health, let alone just the gut microbiome, brain health, overall physiology, cholesterol. So some folks are getting into more plant-based diets because of that reason. And then others, of course, are investors looking for the next big thing. But what we have found through our network, through our acquisitions, through our relationships, because we've been in this space a long time, is this is a rare situation where you have multiple consumer, like behavioral things happening where people want to eat better, the environment and public policy sector level inputs, where plant-based foods becomes a trend that we'll be talking about in 20 years, the way we talk about probiotics today. And those have been around for 30 years. So why is it important? It balances the environment. It balances human health. There's a significant amount of capital going in that has changed the conversation to better, more convenient, higher functioning ways to consume plant-based foods. In addition, which is not the leading part of our thesis, but as a component, is there's whole crop utilization, Aaron. So we've taken what God put in the ground and we've found ways to optimize and be creative and imagine. So it's not just the proteins, it's the starches and the fibers. All of that has created a market, depending on the study you read. And I've started to become a little cagey about what I quote, because every 4 weeks, there's a new study that says the market's even bigger. Bloomberg came out a few weeks ago, said just plant-based protein will be $160 billion in the next few decades. Anything you look at, high double-digit CAGRs of revenue because of these adoptions of the diet, the environmental stewardship, and whole crop utilization. And then the other practical thing I would say to your audience, and we can continue to discuss it, is we have now the ability to make the foods more efficient, We get the very best properties, whether it's a protein, for example, or the fibers, and we can develop that into food forms that people are used to. A decade ago, the word vegan was a bad word. It meant I'm eating something that tastes like chalk and my mom's making me do it. Today, vegan is a little bit of a badge of honor, whether you're doing it because of dietary needs and non-dairy consumption or for other reasons, just to balance out your plate. So why should the investor mind at the end of the day? This is the first inning. This is the first inning. We're one of a few companies that are in this space. We're one of the only pure play vertically integrated companies, and your investors can really buy and hold for the long term with great gains.
Awesome. So what sets Eat Well apart from the major players in the plant-based food market?
Listen, that's a great question. We get it a lot, and we're proud of our answer because we've put a lot of work into it. Number one is our management team. So without exaggeration, we have about 120 years of experience collectively, whether we're close to the farm, and I'll mention those team, or we're close to the consumer, whether we're financially minded or we've done global business development. We've learned a lot of things the hard way. So across our team, you've got consumer products veterans like myself. You've got Tony and Francis Gaudet, who lead Bell Pulses for us. These two brothers are salt of the earth. Bell Pulses is the crown jewel of the prairies in Canada, and it's a 4-decade-old business that's mature, that's agile, that is profitable, and has products sold in 35 countries. So it's a fantastic business run by real people today with real revenue. It's over a 40% gross margin business. One of our other key leads is Dr. Gino Bertone. He leads Sapientia for us. That's the IP group that we invested in. And he's a veteran of the Frito-Lay company. He's the inventor of the Twisted Cheeto.
Wow.
And so he said, it's time for me to make functional foods and help kids get healthier. You've got a management team that's done big things. Two of our partners, Pat Dunn and Marc Coles, helped develop Verdient, which later sold to Ingredion, one of the biggest plant-based food ingredient companies listed on NYSE today. So that's management. I could go on and on. The second bit that we have is we have real businesses today that you can monetize. So we're projecting in the neighborhood of $60 million Canadian in revenue by the end for this year at a $15 million of gross profit. So again, many of the young companies, maybe they're entrepreneur-led today. Many of them are our friends in the industry. We're doing good things. But Eat Well Group's differentiation is real revenue, real gross margin today. And we're an EBITDA positive business. Of course, we'll be investing and reinvesting that for growth. The last thing I would tell you is we are practical. What does that even mean? Where I told you the supply chain is critical to fixing plant-based foods. So our scale investment was Bell Pulses. Today, you can look up the MD&A reports from folks like Beyond who are flagging supply assurance, quantity, quality, price. Our scale acquisition was upstream, close to the farm, because we know that's a critical need. And we've also built in agility. I'll come back to that in a moment. So we have practical thinking in our businesses. Sapientia IP is a leading extruded product purveyor of IP. This is process IP. This is machinery IP. So we have a vegan Cheeto type product, which will be launching by the end of this year in the Federated Co-op. As your Canadian audience knows, in Western Canada, it's real product. So we're monetizing IP practically now. We don't have to wait for 3, 4, or 5 years, even though we're very close to many of the food tech leaders in the space. So it's practical. But I would finish with this last bit for you, Aaron, is that we've built in scale that's led by food tech with commercial agility. What does that mean? We are feedstock agnostic. In the plant-based foods world, we're literally talking about what pulses do you process. So we process yellow peas, green peas, fava beans, but we can process multiple different types of pulses. That matters because in food tech, so down the road, we know that we need pulses that have better efficiency for throughput, better taste, better yield, better color, texture for food products. Because we have both pieces of the chain, we talk to each other and we say, how can we get the next feedstock in? By the way, the agility that Bell provides is we have a network of well over 3,000 farmers that we talk to. We know seed geneticists that we're talking to. So we're close to the farm, close to the ingredient, but we're not tied to one ingredient. We're not tied to one technology. Similarly, when I talk about our food tech play, this is just one product of a few dozen we'll be talking to you and your audience about over the coming years. Anything snacking related is our expertise, but we also have alternative meat type products that will be coming down the pipeline as well. What that means ultimately is we are able to bridge across the entire chain. The left hand knows what the right hand is doing, and that's been a problem historically in plant-based foods. The farmers don't really understand what's happening in the end product. And the last bit I would tell you is that agility that we have is we have our own brand with Eat Well that we'll deploy, but we also will do white label or private label with the right tier one CPG partners we have in big food. And we also have relationships that are global. So I think I mentioned already, Bell's is sold in 35 different countries around the world. We do human and pet food. So there's discipline in the model, there's design and vertical integration, but it's a platform with just enough agility so that your investors are not buying a one-trick pony.
Awesome. Thanks for that answer. That was that was quite the response. So Eat Well completed several large acquisitions this year. Let's talk a little bit about your acquisitions. So tell us about those and how they've shaped the company's mission.
Yeah, I think that is a critical piece. What you find in being mission-led in this space, this is a beautiful space to be a part of, because it checks a lot of the boxes on an ESG-driven investment, which we are talking to so many people globally about. In fact, Prince Khaled, who is part of KB Ventures, an architect of the plant-based movement globally, was announced last week as joining our advisory board. So we're talking about folks who are mission and purpose-led globally, whether it's an ESG fund or just a personal set of values. We're able to do that in accomplishing this mission to feed families worldwide. We will do it transformationally because of the reach we already have, the relationships we already have, and we can do that in a way that doesn't just meet the needs of developed economies, but it's also about food security and nutrition economy. Whether it's the Middle East or Haiti or even the storms that are hitting the US, we're able to accomplish that mission through these products we have today. We're not waiting, like I said, for products 3-4 years from now to come down the pipe. Bell has enabled us to understand quite deeply how the grower networks function, how we think about whole crop utilization, because we manage the protein, the starch, and the fiber. A bit technical there maybe for the audience, but what that means for the investor is we monetize the entire crop. So we understand where crop trends are going, where growing trends are growing. We also understand through our food tech play with Sapientia. I think it was last week, Dr. Bertone and I were on calls with Japan and Italy with some of the foremost thinkers in functional foods, in functional dinners. I can't go into detail about the products yet, but we'll come back with our announcements. These are real products being made now by scale players. So what does that mean for the investor? How are these businesses helping create growth? Like I said, we're at the cusp of a secular trend. I've explained all the vectors coming in, but what that number should mean to us is vegan salty snacks. So that's a little bit more of an industry term. Vegan salty snacks are projected to be a $70 billion business over the coming decade or two. Think about just one aisle in a traditional grocery store of unhealthy salty snacks. Mm-hmm. Our mission lines right into that, a very large addressable market. Consumers want variety. Consumers don't have time to eat. So that's critical. The other piece I would tell you in terms of the alternative meat space, here's one of my favorite data points. Plant-based foods is about $12 billion today, Aaron. Traditional chicken is about $200 billion. That's just one delta, one thought process to say, if we carved out a piece of the chicken market, because plant-based foods is so small compared today, and where we have multiple pulses through Bell. Okay, so what does that mean again for all your investors and how this has shaped our mission? We are ESG friendly. We have global relationships, as I mentioned, with Prince Khaled or KBW Ventures that your investors would have read of the news last few days. We know the leading food manufacturing platforms in Italy, in Japan, and other places in the world. We can service nutrition security and end products. But, you know, it's almost dangerous because there's such an excitement here. I do want to make it clear. We are a long-term play. This is the first and second inning. Your investors don't have to worry about big swings in what we do with our stock or big swings in what we do with our business. We're building for the long term because this plant-based foods trend is absolutely here to stay from womb to tomb, if I could.
Yeah, no, I agree with the salty snacks. I was in a grocery store yesterday, actually, and it's like almost a full aisle. Like it's at half an aisle, but I can see it easily being a full aisle very soon. So it's cool to see it in the real world. So those acquisitions I've also added some serious talent to Eat Well's leadership team. Who are the key members and how will they help shape the company moving forward?
Yeah, so I mentioned to you Dr. Bortone on the snacking side and Tony and Francis Gaudet on the Bell Pulses side. Each of these leaders in our business has their own ecosystem of approach of leaders. So whether that's pulse processing technology, seed genetics, which is absolutely critical. We also have sector level relationships. I mentioned Prince Khalid, but we also have close relationships with the Canadian government and key players in the United States when it comes to tier one CPG. Again, what that means for your investors and your audience is this is not a group of entrepreneurs or opportunists who just showed up. We love entrepreneurs. We work with entrepreneurs. But because we've learned a lot of lessons the hard way, we've been doing this a long time, we have networks and relationships that drive business now. We have fiscal discipline designed in the model now. And so we have seasoned management teams that understand how to think about long-range investments, how to think about short-term cash. And when you really look at how the performance of the company is today, we're brand new. The baby's delivered, but I have to tell you, the baby's healthy. The stock's already starting to respond. When you think about the comps today, we are significantly undervalued. We're at a discount. We're at a discount because the news is just getting out. So for your investors that want to be able to get in on something at the beginning of a long-term trend, that's what today's opportunity looks like. So we're trading at roughly 3 times revenue, and we intend to use our relationships with our leaders in the management team, our relationships globally, and you'll be hearing about more advisors that have come on board for our team. This is going to be opportunities and news for quite a while.
Excited to cover it. So the company plans to launch an innovative product to the booming vegan snack market in Q3 of 2021. Can you tell us more about that?
Yeah, this is the vegan Cheeto we're very excited about. It's going to be by the end of this year out in the federated stores in Western Canada, about 200 stores, give or take. We're already in discussions for expanding with utilizing this functional plant-based protein. You know, in the food business a long time ago, we would say there's something about the absence of negatives. So food that's less bad for you, but there's still a gap in the market. Presence of positives is the other foodie term. And that's what we've done today. So our vegan Cheetos have up to 4 times the amount of protein that traditional snacks have. I have 4 kids that are still in the middle school and elementary years. This is what I'm talking about. I want to be able to let them go free, enjoy healthy, fast food that accommodates being on the go and being active kids, but I also enjoy it myself. So those will be launching by the end of the year in select brick and mortar. We're also developing our own D2C e-commerce platform, and then we'll continue to drive selective brick and mortar next year. We're having conversations with multiple players in what we call point of entry. So think about where kids and families can get exposed to new foods that are healthy. It's school systems. It's other places where there are point of purchase opportunities for impulse vegan snacks. We'll be sharing those with you over the coming months.
Yeah, you know, like getting back to the gym, I find it hard sometimes to get all the protein. And last night I was eating like a chip made out of beans with like 4 times the protein. So yeah, I support it. And I think it's an awesome new market. So what can investors expect from Eat Well in the next several months?
More news, more good news is the short answer. So as I mentioned, we announced one of our key advisory appointments last week. We just executed our name change about 2 weeks ago. In addition to some of the new lines of business we've developed with the vegan snacks, you'll hear more about our opportunities of expansion of our current core at Bell Pulses. Think about corporate strategy 101. You take the businesses you have and you maximize their core competencies. You'll hear more news about how we've developed growth levers that is across North America with those businesses. You'll hear about more advisor appointments. We have significant and very exciting partners who've come to join us, and they are what I would say is craftsmen in the plant-based food space. And Eat Well Group is an acquisitive group, and we look forward to more investments long-term as we round out the platform. So it would be our desire to, and be disappointed not to share with you over the next period of time that we're looking at new investments that we'll be making. And in those spaces that we look at, we're very disciplined in our investment thesis. We don't go into crowded spaces where plant-based is already old news and people are simply competing on one attribute or another. We will continue to look at big addressable markets with transformative change opportunities. So you'll hear from us on investments we're making in new companies, and for sure, there are more things I know my team would love for me to tell you about, but we're going to keep that discipline and come back to you when it's live.
Oh, that sounds great, Marc. So finally, what's the best way for investors to get in touch with you?
Oh, sure. eatwellgroup.com. Best way you can get in touch with us is go to eatwellgroup.com. You can download our latest investor deck, sign up for our email subscriber list. We're on social media as well, and we have a very active press and IR team. But the best place to go for now is eatwellgroup.com. You get all of our information and where we're traded on the OTC and so on in Canada and North America. And we'd be delighted to get to know you.
Wonderful. Well, thank you so much, Marc, and I look forward to continuing to cover your exciting story.
Thanks so much, Aaron. All the best.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.